Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So what I was planning to do today was do some changes to the portfolio. So as you can see here right now, the portfolio seems slightly unbalanced because I do have some cash to invest. I've got 1,000, almost 800 pounds. Over 370 pounds of that came from the money that I've added for this week, plus dividends that I've received, which I will be sharing with you guys next month, inshallah. Already some companies have paid me, but 1,417 pounds of that came from a sale that I just made. I've kind of hinted this sale was coming for quite some time. I was about to do all the changes that I needed to change because all that money is basically going to different companies. So I wanted to do that, but then I thought, you know what, let me share this with the community, and so you know exactly what I'm doing. Like I've always said to you guys, I'm going to share my journey with you guys. That means when I sell, when I actually buy new stock, I will tell you exactly. Okay, and this is what we're going to do right now. So I'm going to explain first of all one thing that I missed out on the last video. Last video we talked about dividends, and I've talked about basic dividends that I've received for the month of December. Okay, we also I said we are also going to talk about the rental income, but I didn't have enough time at the end just to kind of add that part. So I'm going to talk about that right now. So the rental income comes from basically my one-bedroom apartment in Leicester, United Kingdom, that pays me £575 per month after I pay some management fee, because there's a company that manages it. And the reason I do that is because I just want the hassle free, because I'm not in that city. So the fact that I'm not there, it's easier for me to someone else to manage it. So sometimes when things go wrong, they will contact this management company, will first of all find a suitable candidate or tenant if you like, and they really did a thorough job. We could have rented it slightly higher, but the quality of the tenants that we got, they were absolutely shocking. And if you know, right now in the UK, being a landlord is probably the worst thing that you can do. So you really need the management company to help you out. So that's £65 or 10% of that, whatever. Basically I don't mind, plus the VAT of course. So alhamdulillah, there's no maintenance for this month. That gave me £506. So that's basically the money that I received. Now dividends was £226. If you haven't seen that video, go and watch that video first of all, because I've kind of broken down of the reasons. I've talked about how much I've received for the year, how much I'm expecting next year, the plan for next year, how much I've received since the beginning of this whole investment journey, what I've done with that money. So there was a lot in that video. So if you haven't seen that video, go and watch it. But the total amount was £226.32 that I received for the month of December. Now, if you add the two together, I've got £732. And one of the things that I've talked about earlier on that video is basically the fact that a lot of this money that I'm receiving right now, I'm reinvesting back into these properties. So right now, this money will actually come to this account right now, not the family account. This money used to go straight to the family account. I haven't done that in ages. I will be doing that inshallah. There are a couple of other reasons why. And one of the reasons I'm basically not reinvesting right now into that portfolio is because I'm short of cash, because I have another property that's off plan that inshallah I would be getting the keys inshallah by the end of this year. So my last payment for that, so it's kind of installments. My last payment is in December of next year. So inshallah by then I should get the keys. Like you know what is going to happen. Probably might not get the keys straight away. It might take a couple of more months to whatever, but it doesn't matter. The point is I will be paying off completely this time next year. I will not have anything to pay towards the house, which means I can invest more money into this. Now it costs a lot of money, to be honest with you. It has taken a lot of money out of my pocket. So for that reason, I have not had enough money to invest into this portfolio. That's why when you look at my ISA, I still have £14,000 to put in, okay, before the end of this year, which is absolutely crazy. And I'm still determined, because I'm very stubborn, okay, to do that. And I'll see how it goes, but I'm gonna aim for it. Whatever happens, even if I have to sell a kidney, jokes, I will basically try my best. Okay, so all this money is going straight into this account that we are currently looking at, the trading 2-on-2 portfolio. And inshallah, in the long run, the plan is to live off this money. Okay, in the long run, will be stop them basically drip and take that money and basically use that for my expenses. Right now, my expenses, depending on where I go to, might not be definitely not gonna be in England. It will be somewhere nice and hot, I guess, and cheap to live. By then, inshallah, I would have enough money to live off, without having to worry about where my next meal is coming from, alhamdulillah, passively. And I'm one of those people, I know I'm going to work and I know I'm going to do a job regardless, but it will be nicer to have that freedom to say, do you know what, I don't need to work, but I can do it if I wanted to. I do love my job, and I would love to continue, inshallah. So that's the bit that I kind of not mentioned in the last video. So if you have seen that video and you're watching this one, I genuinely appreciate you. Genuinely, wallahi, I genuinely appreciate you, because it means a lot to me. Okay, right, let's now go on and do what I said I'm going to do. So first, I'm going to talk about the company that I trimmed. Okay, I've not sold out this completely, and I'll tell you why. And that company is Cummins. Cummins is one of those companies that have been in my portfolio for a very, very long time. And it has gone up so much over the last, as you can see, for the 1 year, it's 44% up. This company deals with engines, it deals with power generations, components, electrification and hydrogen, services and support for all types of things. And they're trying to diversify away from those old engines and so on into a newer, more renewable kind of energy side of things, which is absolutely amazing. So those hybrid kind of cell power systems, they offer a lot of renewable energy solutions basically, which is quite nice. So they've got all of these things coming in the pipeline, and I really like the business, and you will never see people talking about this company, but I have invested in it for quite some time. It seems cheap enough, but at the moment it's a little bit more higher than where I wanted it to be. So 2 stars right now, 24% premium. I can't add to it, and the reason why I trimmed it, look at this, the price 281 is where they think the price should be. $348 per share is where it is now. Some companies can maintain this and sustain that, basically the growth that they've got. Others cannot. Let me show you one of the main reasons I'm planning to trim this company. If you think about it, next trip, basically, if the sentiments changes in the overall markets, right, and stocks will go down, this company will go down. Today is down for the same reason as every other company is down today, right? Next quarter, this is what they're expecting from the company. Okay, year-over-year growth. Look, they're expecting a decline. So this is their first quarter. So they've already reported this one, December 2024. Now 2025 March, that's the first one. So there is a decline they're expecting. If that's slightly lower than what they expected, the stock will tank. It will go down. I've seen it go down 10+% and not long ago. So that could potentially happen. With revenue, it's almost the same, all over 4% decline as well. So if that happens, it could wipe out all my gains just like that. And I'm not willing to take that risk. If we look at annually, it's decent. Okay, we're expecting about almost 8% for 2025. This time next year should have actually gone up year-over-year growth of about 8%, which is nice. And then the year after, about 23%. Revenue, what we normally expect from this type of companies, about 3% in 2025, which is not great. Basically about 8%. I normally expect the 5 to 10%. So 8%, 7%, 9% will be better than, of course, 3%. So that's one of the reasons I've decided to trim, and I'm going to show you quickly now exactly what I've done with the stock. And if I go here, I will show you Cummins here. Here we go. So I do have had 17 shares. I've sold 5. Okay, and that was £1,417 that I made. And I think let me show you what I've done. Just to be honest and transparent with you guys, this is the sell. So this is split into 3. So the first one, we made £451. Okay, this one is nothing anyway, whatever that is. And then 120. So the 470 whatever 50. So about over 570, closer to £600, which is absolutely nice. So that 600 basically profit, we've locked that already. So alhamdulillah, that's a good thing. And moving forward, these are some of the companies I will be adding to. And the first one is this company here that I have been basically bullish on. and it has come down quite a lot from where it was, and then it bounced back again, and that company is ASML. ASML has gone down quite a lot, came bounced back again. So year to date, as you can see, is flat. For the 6 months, is down about 33%, which is absolutely ridiculous. When we look at the basically compare the earnings expectations moving forward for this company, first, basically this time next year, they're expecting about 21% year-over-year growth, which is absolutely massive. This company is basically monopolized the market when it comes to basically the products that they sell. Almost 14% when it comes to the revenue side of things. And if we look at quarterly as well, the expectation for the next quarter, so this is again the first March is when they report, we're expecting 51%, which is absolutely huge, and in comparison to what we've seen, and revenue of 31%. So for that reason, I really like the business. I do own 14 shares. This is my average right now, £524 in terms of pounds and 656 in terms of dollars. So what I'm going to do, I've got 14 shares, so I'm going to just add one more share, inshallah, and just leave it. And after this, I think I'm just going to leave it alone and basically don't touch it moving forward. I will see how it goes. I'll probably be, £526. Okay, so that is already done. So 15 stocks, basically 15 shares that I own, £847, £8,473. So that's it. That's the first one I wanted to do. The next one is EOG Resources. Well, this is one of the companies that have underperformed the S&P 500. A year to date is actually flat almost. The last 6 months is down a little bit. And when you look at the earnings expectations, there's nothing great to expect from this company right now, next in 2025. But 2026 is slightly better. Again, it's very cyclical business. You know anything, if you know oil prices, you know what can happen easily. Things can easily change. Now, this is more of a dividend growth portfolio, and this is what a dividend growth play. As you can see, when it comes to safety, is absolutely fine. The growth rate is basically A+, which is absolutely amazing because it's almost to 30% in the last 5 years. The payout ratio is very low. That's what you get for every share that you own, and right now I'm getting a yield of over 3%, which is absolutely amazing. So what I'm going to do now is buy 5 shares of this company, and in terms of moving forward, I think I'm gonna, there we go. So we do own right now. So this is the one that we've just added to. So we've added I missed that bit there. Let me show you quickly. I've clicked it too fast. So I've added just now, I've added 5.1 shares on the price of 512 basically dollars, £12 overall, and that means now we own 38 shares. How much do we? I think it was 38 shares. There you go, 38 shares, $92 per pounds in terms of my average, or 122. So I'm going to continue buying this one, inshallah. The next, I would like to get to at least 50 shares. So that's the next one. The next one is a newish company that I have added to the portfolio, and that's Waste Management, and really another great company that I've, I know it's a little bit slightly overvalued, seems slightly overvalued. According to Wall Street, it's not really. According to Quant, it's not, but I think it's a little bit overvalued. So I'm just going to show you in terms of expectations moving forward for this company. We're expecting double digits almost following years. In terms of EPS, in terms of revenue, more or less the same, 16%, and the next year is about 5%, 6%, 7%, more or less in the following years, which is absolutely fine with me. So I'm just gonna buy. I own 3 shares so far. Let me just quickly show you. So 175 is what I own here, 3 shares. So I'm gonna just buy 2 shares because I do believe it's still a bit more expensive. So if I show you here, I think is still about 2 stars. I think there we go, 2 stars. So about 11% premium right now, and I think it is coming back down again. It has come down since I've owned it about 8% or so. So I hope that basically we see a bit of a dip in the market, so I can buy more of this company, inshallah. That's it. That's the next one. Right, just a couple of more. The next one is Hershey. Hershey's been down and out for quite some time. I do own 40.6 shares. I'm going to buy 2.4 shares. I think we have about £400 left, closer to £400 right now. So let's do that. So we got 2.4 2.4 shares of this company. Again, my average, just before I move on here, £148 or $186 per share. Right, let's do that one more time. 2.4 shares, 320 whatever, and that's that one. Send it to the market. So we should now have about £52. Okay, and that will go to the ETFs. The ETFs are probably, the market is closing out right now for the UK, so it will open tomorrow. So when it opens, basically that money will go towards the ETFs. There we go. And whatever the balance is, I'm just going to leave it whatever the thing is. So I'm just going to leave it like that. Send it. There we go. Your request will be processed after the market. That's absolutely fine. So Friday morning, that's when this will get processed. So overall, we now have about £14 or whatever. And that, well, why did that happen? Anyway, I'm going to include that in the ETF, so that's fine. Right, so that's what I wanted to share with you guys. I hope you enjoyed this content. I hope you enjoyed transparency and the bit of a messiness. I was about to do all that by myself, but I thought, you know what, let me just share the madness with the community, so at least you know. So that's the reason why I trimmed, so you know exactly why I'm trimming that company, and also why I'm actually adding to all of these companies that you see here. All of them are high quality businesses. All of them are dividend growth businesses, and inshallah in the long run, including the ETFs, they're all great businesses. So I want to hold on to them. I want to add to them as much as I can. Like I said, this one is a little bit overvalued, but the rest of them are okay. We will see what happens, inshallah, moving forward. And as always, I genuinely appreciate it. I would appreciate if you can join us in the Patreon account. Even if you can't do that, just like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.